All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla has had some volatility in a downward direction, upward direction, breaking through resistance for about an hour and a half, fell back down, broke through support for 30 minutes, and brought itself back up, broke through the 50-day moving average, and now is slightly below it. If we zoom in real close here, you could see that the 50-day moving average is 418.81. We're currently at 418.68. Super important to keep that in mind, that we are slightly in bearish territory. If we're below it, below the 50-day moving average, we're in bearish territory, and if we're above it, we're in bullish territory. So super important to keep that in mind, and we're currently slightly in bearish territory. So this tug of war is going to be interesting, and we're going to look at our resistance and supports. So if this was to continue to work its way down, this is the first nearest support level. I know that this is the lowest point of the day, 410.04, and the one before the run, but this is the nearest to it. If it breaks through all of this bullish run, this is the nearest one to it, and that is 411.76. I'd write that down. If that gets broken through, this could be well on its way to newer lows and pulling away from the 50-day moving average. So every investor, I emphasize to all of you, pay very close attention to how this is reacting. If it breaks through it, and if it does, then your next point would be down here at 407.57. But before getting there, 411.76 is the first support level. Watch the behavior. How quickly is it pulling away and hitting newer lows? Or is it giving a chance for the bulls to reappear and bring this one back up? Now, like I said, we're slightly in bearish territory, so the tug of war is going to be interesting tomorrow. For the bulls to recover and get back into bullish territory, obviously they need to break through the 50-day moving average, which is 418.81. But to work their way up to newer highs, they need to pull away from it, break through the first resistance, and that's 421.56. Turn 421.56 into a support and start to work their way up to newer highs, pulling away from the 50-day moving average. So it's super important for the bulls to be able to do that. And the first step is breaking through this resistance. And before getting there is the 50-day moving average. But the first step to pull themselves away from the 50-day moving average and allow the bulls to hit new resistance levels, newer highs, they need to break through this resistance level, 421.56. So I want to emphasize, the bulls need to break through this so they can pull away from the 50-day moving average and start to work their way up to newer highs and new resistance levels. As always, I hope that these cues are helpful for tomorrow's trading day and you guys will be well equipped. And if you're a first-time viewer and investor and feel inclined or subscribed already and you haven't had a chance, please do so and click on the bell. Click on the bell so you can turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves. Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.